Hey traders, Akil Stokes here, head trader and trading coach at tradingpower.com, and welcome to this week's weekend review. Today we're going to talk about the reality of trading, and by that I mean some of the emotions that come with the trading lifestyle and how those may affect your success in the markets. I'm also going to take you through what was easily the trade of the week on dollar yen, and even tell you why I'm still holding a small position on there looking for a little bit more. So I know it's only Thursday, but the weekend review starts now. Okay, so welcome back. As always, I want to start off with a little recap of our live room, and this has actually been a rough week. Now, pay attention to my words. I say a rough week and not a bad week because, well, there's a big difference. Bad is defined as not following my rules, meaning I made mistakes. I did something that I wasn't supposed to. I did everything I was supposed to in my day trading this week. Unfortunately, it just didn't pan out the way I wanted it to, and we are in a drawdown. I don't have my stats in front of you. They're at the office, but I think up to this point, we've probably taken about 6 or 7 trades and only have about 2 winners in there. And what was frustrating about today was that, well, we had a few trades that just barely got stopped out. We had a few advanced patterns today in the live room. We had a couple that either roll down to the point where I roll my stops to break even, because I do take targets a little differently on the lower time frames. So they roll down to the point where I can move my stops to break even, shot up, took me out for a scratch trade, and then rolled over to my would-be targets. And then we had a few that came within, were stopped us out by either the spread or about 1 or 2 ticks, only to roll down and achieve target 1 and target 2s. Now, to me personally, those are the trades that really frustrate me. I don't mind if I'm in a short position on euro dollar and we get a big bullish candle that just takes me out right away. That's okay. That's like ripping a Band-Aid off really fast. Quick pain, and I'm in searching for the next opportunity. But the ones that barely take you out and then roll over and to basically tell you, hey, you were right, but just missed it. Those are the ones that bother me a little bit. More importantly, I know it bothers a lot of my live room members, especially the newer ones that are still getting used to working with those emotions. Now, fortunately, I've been through this day in and day out, week in and week out, year in and year out, so I'm pretty much numb to most of my emotions in the market. I rarely get excited or mad about anything, and for them to have I guess a coach, for them to have that type of support in the live room, to be taking trades and to be having a bad day, but to see the other traders, including myself, not get frustrated, still continue to keep their calm, redo their analysis, and look for the next opportunity. That helps, and that's really the main focus of our room. Yes, we trade. Yes, we make money. Yes, it's education, but more so, it's support, dealing with the psychology side. Which is always important. Now, I'm going to talk about that a little later, and it actually comes from a post I did on my blog this week that got a great response. I'll recap that in today's video. But before we get into that, I want to talk a little bit about this week in the syndicate. Now, the live room did have a drawdown. The syndicate, well, we continued our successful ways. Not that many trades this week. There was a Gartley pattern on dollar CAD. Pretty pain-free winner, hit target 1 and target 2, I believe, both on Monday or Tuesday. And then the trade of the week was the dollar yen. And well, I'll just show you what we did on that.
So we're here on the dollar yen 4-hour chart. I'm actually going to go over to let's go over to the daily chart and the higher time frame to get a better bird's eye view. And whenever I do my swing trading on the higher time frames, especially the 4-hour chart, I want to get a bird's eye view or a top-down view of what the market's doing overall. And just briefly looking at this, here's what I'm seeing. We're seeing get my tools right. Trend line. We're seeing a pennant pattern right here. The market pushing from a swing low to swing high, and then forming essentially a triangle at the end of this. Or a wedge. This is a pennant pattern. Click on these tools the right way. Boom. Boom. Now I don't personally trade these. I don't trade them too much, but they're important to know. And we did see a breakout out of this pennant. More importantly is what we did after we broke out. And if I zoom in a little bit, come on, there we go. Zoom in a little bit, you'll see that we recently had a break and close above structure. So if I draw a line right here at this structure level, you'll see that we did indeed get a break and close above it, giving us a new structure high. Now, if you spend any time in our not the 12-week, well, if you spent time in 12-week transformation training course, you should know this. If you spent time in the technical trader workshop, we explained all about the importance of these new structure highs, these break aboves and close aboves. What does that mean? Well, whenever I see one of those, I think trend continuation in that direction. So the first thing I want to ask myself is, where is the trend, or where is the market likely to go next? Look left, structure leaves clues. Our next structure level is where? Right up here. So seeing that new structure high tells me there's a good chance that the market may push these higher levels around 110s. Now, the next thing I need to wait for is I just don't want to trade it after the breakout. I don't want to trade it after the new structure high is created. So what I want to do is wait for a retest into that previous structure level, and you can see that's exactly what we got here. You can see market came up, put in a new structure high. We then came back to retest that structure level. Now, if I go down to the 4-hour chart, here's where I got my reason for entry. And it actually came in two different ways. I'm going to zoom in and pause the chart, or pause the video real quick to see if you guys can identify it. But there are two advanced patterns lurking in here. See if you guys, see how good you guys are. See how many of these videos you've been watching. All right, we'll start the first one. The first one is the one that I actually took, and it was a cipher pattern. We're looking at an X to A to B, B to C, and then a CD completion right down here for our cipher pattern. There was also another advanced pattern in there. There was a bat pattern. If we take this entire move, so if we take the entire X to C move of the cipher, going from swing high, or swing low, excuse me, to swing high, X to A to B, B to C, C to D right down there, then we have a bat pattern as well. So just go over everything we just talked about. We talked about the market creating the new structure high. We talked about the outside return, the pullback, the retracement, whatever you want to call it, the move back into structure, already determining a bias for what we want to do with this trade. Then, as we went down to the lower time frames, we found two advanced patterns at that same structural level. Do you think that was a good buy? Well, I don't have to answer that. The market showed us for us. You know, we bounced right off that level, and boom, we went up right away to hit target ones, I think, for about 60 something pips, and target twos for 120, something like that, close to 200 pips total on the trade if you're trading a two contract position, I should say. So not a bad trade, and that's why it's the trade of the week. Everything was essentially perfectly lined up, and if you're going through your CTS score, you had an amazing score, probably close to that 13. Now, I am still keeping one position open on this because of that higher time frame bias. Again, going back out to the daily chart, you know, this is a trend. Although we're looking at small patterns on the 4-hour, we're looking at a trend continuation move, or a potential trend continuation move on the daily. So I put an extra position on this trade in hopes that we can get up to this level. I got to draw some fibs on to see where, you know, the ratio, confluence, and structure line up to project my target. I don't remember right now. Sorry. But I'm playing that last position for an extension all the way back up here, and hopefully to make this into a home run trade. You know, if you guys have been watching my videos for a long time, you know I usually don't shoot for home run trades at all unless the opportunity looks amazing, and well, this is one of them. Not to mention you had the fundamental news out for the yen about devaluing their currency and doing everything it takes, and well, essentially until they go back on that statement, you know, why would you want to take it, or why wouldn't you want to be long the dollar versus the yen, I should say. Not that I took the fundamentals into account, but just in the back of my mind, that's always sitting there as a plus. So that was the dollar yen trade, by far this week's trade of the week.
So going back to the topic of discipline, again, this was a post I wrote, and I want to walk you through uh, basically a situation that I came across this week not the live room, but live markets in my personal trading. If you watched last week's video, then you know we had a very good week. We've been on a hot streak. I think at the time with the dollar CAD winner, I was about 5 for 6 in my swing trading, and you're feeling good. You're feeling a little loose, loosen up the tie, feel like you're unstoppable. You get that feeling that says, man, Akil, I'm really the man. I can't lose. I'm on a hot streak. If you guys ever played basketball, and you're just shooting and sinking every single shot, it's that same feeling. You just want the ball so you can shoot it some more. So I woke up in the morning. I did my normal higher time frame analysis. This was early in the week, so the market was still putting in a bunch of pullbacks off of the non-farm and unemployment releases on Friday. And I'm saying to myself, man, there are about 5 excellent trend continuation opportunities on whatever pairs I was watching at the time. Now, me in the past would have done this. Me in the past would have took every one of those trades, not waited for my rules to be set, and would have lost a lot of money. So what I did in this post was I actually broke down the would have, could have, and the reality, the harsh reality of what would have happened if I didn't stick to my rules and if I let my emotions get the best of me of this market or in this market.
So here's the post I wrote this week on basically avoiding that emotional trade, and was talking about overconfidence. And I got a lot of good feedback off of it. I'm not going to share all of it with you, but a few of the good ones came over on my Facebook page. And if you don't like me on my Facebook page, go over there and do it right now, please. But one said, for me, the overconfident / hot streak mindset has in the past been the single most detrimental bad habit in my personal trading. Worse even than the get even with the market mindset. Even today, I sometimes catch myself trying to shortcut around my rules when I'm on fire and have to either immediately put myself back in the check or simply get up and take a break for a while until I'm sure that I can be disciplined again. Another trader said, when this happens, I log out of my trading platform so that I have to go through the bother of logging back on to open a trade. Adds an extra layer between me and the trigger, and more times and gives them more times to be sure. So a few traders commented. Again, you can read all the comments on the Facebook page, or if there are any under here. They commented on little tricks they use to stop themselves when they feel themselves getting emotional, overconfident. And I'm not gonna lie to you guys, it happens to the best of us. I think it's despite what my live room members will tell you, I'm not a robot. I do have emotions. They rarely show, but I do have emotions, and I feel upset sometimes. I feel greedy sometimes. I feel overconfident sometimes. And the question is, you're gonna feel this at some point in your trading journey, through your trading career. What can you do to not let those emotions get the best of you? And these were some great solutions. Just basically get away from the market. I do the same thing on losing streaks. Again, today was a rough day in the live room. I got away. I went out to the gym, lifted some weight, got the muscles all burning, and came back and forgot all about the rough day. But I want to walk you through some of the numbers. I'm going to read some of this for you. Let's take a scenario with these trades. I said last week I banked 265 pips on the syndicate trades. I showed you guys the little spreadsheet I made up for those. On Monday, Canada gave me another 92. And that was the two target. I think it was a Gartley or a bat pattern we took on Canada on Monday. And yen so far has given me 65 pips on target one. We just talked about that. So I'm not even going to count the 100 and something from the second target of yen, because that didn't occur when I wrote this. Anyway, that equals about 422 pips. Now let's estimate the 5 losses and say each one of those stops were 40 pips away. So let's pretend that the 5 trades I was looking at, the 5 trades that I was overconfident at, and me in the past would have pulled the trigger because, when I'm on fire, I can't lose. Let's say the stop loss was 40 pips away on each of those. Well, 40 times 5 is going to be 200. So assuming all 5 of those trades lost, which they would have, just looking at the chart later in the week, they all would have blown right past my stop loss. I would have lost 200 pips, right? 200 pips. But wait, Remember, if you guys have been following me, I trade two positions. So I trade a target 1 and a target 2, which means when I take a loss, I'm not only taking a one position loss, I have to times that loss by 2 because I'm trading two contracts. So that 200 pip loss really gives me minus 400 pips. So let's take the 422 we started off with. Let's minus 400 from that. What does that give me? Well, now I'm back to only plus 22 pips for the month of January. Basically, I blew everything I worked so hard to gain last week because of some stupid emotional decisions. And this happens over and over again. I spent the whole first few years of my career doing this. I would make money, give it right back. And be like, oh, well, I won all those times. I must be good. Let's do it again. Make money, give it all back. And so many traders out there are caught in that continuous circle. We talk about the amount of traders that fail in this industry. Well, even more so, probably don't fail and blow their accounts. I would guess that the majority just either slowly blow their account or just end up break even. And the best way to not have that happen to you is don't make these emotional mistakes. You have a plan. You should have spent significant time going through that plan, getting all the rules set, doing all the back testing. Well, why would you not follow it? The plan is in place to keep you out of emotional trades. It's to make you feel robotic. If you have a question, this looks like a good opportunity. I feel like this is a good place to sell. Who cares what you feel? What does your plan say? Look through your plan. Does your plan say it's a good place to sell? What do I need? My plan says, okay, I need a double top with RSI overbought and RSI divergence. What's the chart say? All right, I've got my double top, but the RSI isn't overbought. What do you do in that situation? What do you do in that scenario? The professional, disciplined trader stays out of the trade. Why? The plan said it needs to be overbought as well. The chart said otherwise. The greedy trader, the overconfident trader, that can't lose, they're going to take it because it's close enough. And every once in a while you'll get lucky. It'll hit. And that's probably even worse because now you think you can break your rules and get away with it. But the majority of the time, again, you have rules to keep you out of bad trades. You start getting emotional and taking bad trades, you can easily blow your account. And this was a great example of how you could have taken your account back to zero, or how I could have taken my account back to break even instead of being 400 pips up. You can tell I get a little fired up about that topic, so I'm gonna quit while I'm ahead. But that's the lesson I wanted to get across in this week's review, guys. And if you don't like that type of stuff, if you just want to see charts and just show me some winning trades and stop talking about losses, well, guess what? You're not ready for the reality of trading. The reality of trading is you're going to have hot streaks. You're going to get overconfident. You're going to have losing streaks. You're going to get depressed. Learn how to deal with it. And the easiest way is to have a strict set of rules that you can follow. That way the ball's not in your court. You don't have a choice. You can only do what your rules say. Whew, I need a break.
Well, thank you guys as always for joining me. It's been a pleasure, and I hope you enjoyed this video. If you do, hit that subscribe button, please. Hit that like button wherever it's at. Leave a comment, share it with a friend. Just get the word out. And well, until next time, plan your trade, trade your plan, and best of luck in the